Gold has just officially broken through $4,200, which is a major milestone that's turning heads across the market. But here's the thing, folks. Gold does not rally because of greed. It generally rallies because of fear. Throughout history, every major surge in gold has carried a message beneath the surface, a signal that something in the broader economy and financial system is beginning to crack. So in today's video, we're going to take a step back from all the excitement and talk about what this really means and why gold moving this aggressively isn't a bullish sign for the global economy, what it tells us about the months ahead, and how this fits into the larger macro picture for crypto, equities, and risk assets as we move closer to 2026 and beyond. My name is Paul Sampson. Welcome back to DataDash. So folks, generally speaking, when gold is rallying, this is not a sign of strength in the underlying markets for the mid to long term here, right? So in the short term, yes, I still anticipate all markets to rally to the upside, especially as we come into this potential final little 15-month stint here in 2026 as we approach 2027, which has always been my landing zone for basically the end of this 20-year cycle in all markets where everything would rally up together and more than likely have some tops come in across the board for the everything bubble that everyone has been fearing since 2012, right? Now, I know everybody's going to state that, oh, if you haven't been following me at least, that, oh, everyone's been talking about a crash forever and it never comes, right? Well, I've been talking about a crash coming at the end of this decade the whole time. I've never anticipated it anytime sooner, and in fact, I've anticipated nothing but upside across the board, especially ever since COVID, which at the time was one of the most fearful times, and everyone thinks that you can't even put that into analytics and charts, and that just messed everything up, right? Well, that was actually the biggest piece that told me that we were going to see this melt up to the upside in the coming years, and again, that it would more than likely take us into 2026 and 2027, and with gold reaching these levels that it is reaching right now, it's up almost 100% in the last year here. This tells us that major investors are lacking confidence in the fiat market, right? So this doesn't have to be just the US dollar. This could be the euro. This could be anything, but a big one is probably the US dollar. And what that means is that not that we have to expect a big crash to come overnight, but generally speaking, in the distance something is brewing, right? So we have to be very cautious around these next few months and maybe even this next year here. And what I mean by that is, yes, it's exciting if you're holding these assets and if you got into it previously, and they could still go up from here, but the end goal here is that likely in the next 12 to 24 months here, that window, and I'd lean more into 12 to 15 just to be a little bit more cautious at this point, is that this leads us into a place where the markets actually do top out here relatively soon, all right? And again, I still anticipate more upside. So keywords there, more up, but this is a warning sign across the board. Investors, again, are flocking into hedge assets such as precious metals, gold, and silver right now with the anticipation of financial stress to come, right? Generally speaking, this is when investors will position themselves ahead of credit, debt, and liquidity issues that occur that generally bring down the markets. Again, folks, this has always been the roadmap to me, especially as we've been coming out of this 2012 timeframe with the last financial collapse, the birth of Bitcoin and blockchain, just everything that just was so timely around those areas. I've always conditioned myself to look a little bit deeper and figure out the why behind some things, because nothing in this world, not a thing that happens of note, happens by accident. Everything in this, especially financial system and everything around us, is by design to some degree. Trying to stay ahead of it in some way, positioning yourself for the better is what at least I aim to do. So with tuning out all the noise around us, right, and you're looking at what is causing this and what is causing that, that is the simplest way to put it, is that investors are preparing, right? And it's not always an immediate, turnaround right here. But I would say that as we approach 2026, that is always been, as you can see right here, a 2026 to 2029 window. It's a wide window. I've had it for a long time. Reason behind it is that this overall 18 to 20 year cycle that occurs within the housing market, the stock market, and now crypto, it's known as the known as the economic cycle, the business cycle, however you want to put it, but every 20 years we see the same thing. And this time around is even the 100-year cyclical anniversary of the Great Depression, which I fully imagine is what we are about to endure in the next 12 to 15, let's just say 12 to 18 months, right? Just could be a little early in that sense, but just keep it, that's my version of keeping it cautious around these areas, because to me, I do not want to be holding a bag at the end of this one, right? So quick overview of this again for anybody that's new, right? Each of these years right here is basically a beginning point. We had a 7 to 10 year run up to a black swan event that occurred, caused 2 to 4 years of sideways. This is called the mid-cycle slowdown, all right? At the end of this 2 to 4 year consolidation, that's always met with high inflation, high interest rates. Everybody expects a recession or the markets to collapse even lower, right? There's just uncertainty at that point, only to be met with a face-melting rally for several more years until you actually top off, right? And this is just one of those times when the market is more irrational than you can think it will be, right? And quick runs here, again, beginning, black swan events, face melting tops. In the 50s, we run it up. Cuban Missile Crisis is a black swan event at that time frame, 2 to 4 years of sideways consolidation. We run it up to the 70s for the high. We restart again 3 years later after a little collapse. Again, these are just the global financial market style collapses where you get 3-4 years of downside, which is obviously a lot. This next one I think will be bigger, but again, even if it's the same, it's not a good time, right? 75, we restart this. 7 to 10 years, we run it up. In the 80s, we had Paul Volcker, which was the Fed chair at the time, who just instituting crazy interest rates that caused this. It was basically just that, right? It caused a little black swan, caused a little bit of a depression. There was only for 1 year, though, actually, around in the 80s. We hit it, and it only was about a 1 year down market, even though the interest rates were at 20%, inflation was going through the roof, all these things, and then the market still pushed up till 89. Where it topped off. Now, these two next iterations are going to seem very familiar. We flipped around again, 1993. We start this dance again. We run it up, 2001, black swan event. We had two in that time frame. One of note is 9/11 in 2001. Secondary one, you had the dot-com bubble burst. That was more so in 2003. Regardless, we had in 2001, 2 to 3 years go by, right? 2003 is when the dot-com bubble really popped around that time frame. You had high inflation, high interest rates. Everybody thought the markets were just going to collapse to the downside, and you got a face-melting rally till 2008, realistically. Markets topped in 07, and then we dropped in 08. A couple years pullback. We re-begin this whole thing here in 2011. 2009 is when Bitcoin was born. I've kind of stated these last few years that the 4-year cycle was really out the way, and I think that Bitcoin's putting in its first 20-year cycle overall, alongside the housing market, the economic cycle, everything that's going to be the everything bubble at this point. 7 to 10 years we run up, and as soon as we got COVID, so I was actually very much, back testing this and tracking this whole setup from this point. In 2012, I kind of got introduced to this. By 2016 is really when I started paying attention. 2018, I expected the little black swan event to occur because we had some big turmoil between our sitting president at that time and another country, and nothing happened. We had a small pullback in the market, but nothing wild. And then as soon as we got the 2021, which again fits perfectly, 7 to 10 years, everybody panicked, of course. Markets crashed. What did we have? High inflation, high interest rates. The end of 2023, everyone expected 2024 to be this huge market crash and correction and recession. And since then, we've seen nothing but all-time highs across every major asset. And I believe that we're truly in this end zone here, right? So it does say 2026, more of a cautionary year. 2027 is really when I anticipate things to really hit the fan. But gold rallying like this, the last notable time we rallied like that was from 2018 into 2020, right? So again, it's not a instant identifier by any means, but it's generally a hedge, again, ahead of time, because unlike most people that wait till the markets pull back and crash before they panic, investors panic when the markets are actually doing really well, right? And as we're coming into some major areas, you have to hedge yourself so that you can position to, if there is a pullback or a correction, you're not going to lose your shirt. So anyways, for me, I have been targeting this move on gold essentially as soon as we flipped pretty much the all-time high, which was back in 2020 there. We flipped this region, and it's just been off like a prom dress, folks, all the way up. And we had one area I was looking at, that 3600, which has just offered no breaks at all. So now we're probably heading up to this 44, right? So we'll see how things kind of progress here. A incredible move here. Again, this is basically 100% rally at this point. So yeah, interesting times. Again, I'm somebody who's been extremely bullish in this market up until this time frame, where I am still bullish, but now I'm just putting out some cautionary signs at these levels, because again, this is where things can get absolutely wild. We could see things completely just melt faces. That's just the best way to put it. I hate using that term because I'm not trying to incite any FOMO, but when you look at gold, when you look at potentially altcoins and crypto and stocks and everything, that we could see a truly incredible 2026 ahead of us. Just be prepared, though, that the music can stop at any point now as we were walking into this time frame. If you would like to see what I'm anticipating for the year of 2026 and the rest of this year for crypto specifically, I just put out a members only market update yesterday in Discord that covers all of my higher time frame outlooks here as we're walking into the end of Q4 and as we walk into 2026, my strategy as we're walking into that time frame, what I'm looking for, the times, everything, the price action, the key price levels, everything that you would need to know. So if you're interested in that, be sure to join us over at datadashpro.com. You also get access to Nicholas Merton's Dash report, where he's been absolutely killing it in the stock market and the equities market as well. We'd love to see you in there, folks. So while everyone's celebrating gold breaking through 4,200, it's important to take a step back and understand why it's moving this way. Again, gold does not rally out of greed. It rallies out of fear, and historically those moments have always been early warning signs that the global system is shifting. Now, that does not mean market collapse tomorrow, and in fact, we've seen in the past cycles we could still have a powerful rally that extends into 2026 and even 2027 before the real stress begins to show. The key here is to just stay aware of the signs, gold, the dollar, bond yields, because they're all telling us the same story. The next major rotation in global markets is already underway. And if you want to follow this transition in real time and see how I'm positioning for it across Bitcoin, crypto, the broader market as well, again, join us inside DataDash Pro. All the links are down in the description below. My name is Paul Sampson. Thank you so much for watching. Stay focused, stay informed. I'll see you all in the next video. Until then, everybody, cheers.